Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the region's rail landscape is poised to witness a 16% growth rate over the next 5 years, as opposed to 9.6% globally, as the regional development of cities and industrial zones continues to push this transportation demand up. That's according to experts at the 6th Arabian Construction Summit that opened its doors today in the capital. The event has gathered over 200 industry stakeholders, including government, project owners, contractors, project management consultants, and more, and is running over 4 days to discuss the upcoming project opportunities across the MENA region and its emerging markets. Amjad Bangash, the managing director of Betchel's global rail business, gave us an insight into what the railway landscape will look like in the next 10 to 15 years.
I think you'll expect to see high-speed links between the various GCC countries. You'll see at a minimum, when I say high-speed, I'm not talking about the super high-speed, but I'm talking about the 100 miles per hour plus 120 something along those range. You should probably see a lot less truck movement of cargo between the various business centers, and I think all of the metropolitan cities will have a state-of-the-art metro system. One of the things that is quite clear is that the projects that are being developed are leveraging the latest technology. So you will see the latest technology being implemented in the rail industry across the region. It's a combination of things. One, it's the development of cities, which is leading to the metro business. Riyadh is a good example. Riyadh is growing. If you've been to Riyadh lately, the traffic congestion can only be relieved by something along the lines of a new metro system. So in Saudi Arabia, there is a multiple drive to relieve congestions in the cities, plus the industrial zones that are being developed. They need to move the freight out of those, and that's driving that as well. And then across GCC, as you're again, I'm sure aware, the cross GCC railway is then driven by container traffic plus some passenger movement, but it's really freight rail that is driving that growth.
Additionally, Betchel announced today that it will establish a global centre of engineering excellence in the UAE, initially focusing on rail and marine engineering projects. Betchel has worked on more than 22,000 projects in 140 countries within the engineering, project management and construction sectors. Officials stated that much of the growth for new railways and ports is in the Gulf region, and the new centre will offer services from master planning studies through to engineering execution, which is set to open in the third quarter of 2013.
The Bechtel's long history in rail, ranging from high speed in the UK to metros all over the globe, and we are here, and we want to develop that expertise locally, and that is the reason for setting up the office in Dubai, so that we can not only serve the Middle East but also the emerging rail and freight and bulk material management business, which is emerging in Africa.
The Federal Electricity and Water Authority has signed 2 contracts with the Saudi National Contracting Company with 850 million dirhams. The projects include a 33 by 11 kV transmission station and the upgrade of a number of other stations in Ajman and Amal Quain, Fujairah, Dibba and Ras Al Khaimah. The contracts will see civil and cable works, as well as geographical information systems, and will cater to demand from 2013 up to 2018. Works on the projects are expected to be completed in 15 months from the date of the signed contracts. The FIWA Director General Mohammed Saleh was quoted as saying that the stations are a part of the second phase of FIWA's plan for new stations and upgrades at a total cost of 1.5 billion dirhams. The Statistics Centre Abu Dhabi announced on Sunday the launch of 3 strategic initiatives: the Personal Inflation Calculator, the Purchasing Power Calculator, and the Abu Dhabi Population Clock at the first ever Abu Dhabi Statistics Conference 2013 that brought together 550 participants and 18 speakers. The initiatives are a first of a kind for the Middle East. The Personal Inflation Calculator initiative will allow users to calculate their personal inflation levels, both in terms of individual expenditures and family expenditures. The system distributes the figures across 12 key segments, which are benchmarked on International Monetary Fund standards, in order to calculate the user's personal inflation levels. The Purchasing Power Calculator links the purchasing power of the UAE dirham with average inflation levels based on the Consumer Price Index, while the Abu Dhabi Population Clock is based on an online program that estimates changes in population levels by the second, as per the personal computer's clock. His Excellency Buti Ahmed Mohammed bin Buti Al Kubaisi, the Director General of the Statistics Centre in Abu Dhabi, was quoted as saying that the 3 initiatives will provide updated data available on the website. And additionally, the Statistics Centre Abu Dhabi signed 6 memorandums of understanding on strategic partnerships with government and private sector entities in Abu Dhabi on the sidelines of the conference. The MOUs were signed with Abu Dhabi Municipality, the Department of Transport Abu Dhabi, the Urban Planning Council, Abu Dhabi Sports Council, private mapping and surveying company Bayanat, and global business analytics company SAS. And looking to other business news now, it was a week of new records, with the Dow Jones Industrial Index and S&P 500 Index closing at all-time highs at 15,118 and 1,633 respectively. In the currency markets, the Australian dollar fell below parity against the US dollar to close the week at an 11-month low. The downward move was amplified after the Reserve Bank of Australia unexpectedly slashed overnight lending rates to 2.75%. And the downward momentum was maintained with a weakening data docket from China, which would suggest a softening. The yen also had a record week, weakening past 100 against the US dollar for the first time in 4 years, as the Bank of Japan continued their aggressive monetary measures. So, with so many new highs being posted, we earlier spoke to Gaurav Kashyap, the head of the DG CX desk at Alpari Middle East, to see if this momentum would continue.
The US dollar posted some outstanding gains in trading last week on the back of improving figures from the US. Now, what we're seeing, Laura, is a correlation, a direct correlation, in fact, between the US dollar index and US equity markets. When the data flow from the US continues to improve, this is having a very, very positive impact on the US dollar prospects as well as US equity markets. US equity markets, the Dow Jones and the S&P are trading at record all-time highs, and we're seeing the US dollar index also trading upwards towards that higher band of 84 levels. And we expect this trend to continue into trading this week. Once again, the play is, if data continues to improve from the US, this basically tapers further expectations that the Fed would continue their record 85 billion US dollar asset purchases a month. Now, what we will be watching for in the week ahead will be the University of Michigan consumer sentiment, a very, very key indicator of how the recovery is coming with regards to the Midwest. Also, what we will be watching for is how the US dollar performs against the Japanese yen. Now, we did see the USD Japanese yen cross 100 figure for the first time in 4 years, and we also saw the Australian dollar dropping below below parity, 1.00 against the US dollar. So these were two main key stories, and we expect the momentum to continue upwards against the yen and downwards against the Australian dollar. Over across in the Eurozone, we are going to watch for the overall Eurozone GDP reading. It came in at minus 0.9% last month, and we expect it to be more of the same in the month ahead. But overall, we continue to like the prospects of the US dollar. The index should be trading between 83.5 and 84 levels, so we expect to see the major currencies continue to remain weaker against the US dollar. Also, gold has been a bit of an interesting performer in the past week. We saw a little bit of downward pressure taking the precious metal closer to about 1400 levels. We don't advise picking up any positions before we see that 14 to 1410 channel, but overall the market's positioning towards moving a little bit lower in gold as well.